So I stay focused on buying quality companies and dividend producing companies, companies that are producing money, cash money for the investors. In the past year, I've earned $764. This is cash money that comes into my account from the companies that I own. Earned dividend. Hello everyone, my name is Kaseem. Welcome to the $1 Million Challenge. So in today's video, we are going to talk about the dividend and growth investing portfolio. Now, this is going to be a quick update. I just want to run through a few things with you guys with this portfolio. The market has gone down a lot, and I haven't been able to do an update in the past couple of weeks just because I've been doing other things. I've been trying to get my car ready for Turo and investing. If you're new and you only watch this dividend section, check out my channel, check out the other things that I do on the channel. But let's get right into today's video. So getting right into the portfolio, let's get everything started here. First thing first, we have a current balance of 77,000. Now that is quite a big dip from the previous video, the last video that I did on this topic, which the balance was at 83,000. So the market has gone down quite a lot since that time. So we're going to run through some of the key metrics here. First thing first, the market is up today, 1,300, and we made a whopping 11 cents in dividend. So in the past week, the market is down $2,375, made $10 in dividend. In the past month, the market is down 6,400, made $67 in dividend. In the past 3 months, the market has been down a lot. It's been down, $14,000. We made a whopping $311 in dividend in the past 3 months. And the last, trailing 1 year, the portfolio has gained $764 in dividend. And if you take a quick look at all times here, the portfolio has made $1,200 in dividend. So one thing I want to highlight here is that this section here, look at this. This is down a lot, 16%. Market has been down 16%. Everything has really gone down. If you're in the market, you know that already. A lot of things has gone down in the past 3 months. We were dealing with COVID. We had to deal with inflation. There's been a lot of things in the past, 3 to 6 months that has just made the market really unstable. And what I'm doing is that I'm still buying stocks. I'm still doing my regular buys. I'm buying companies that I like, and I believe that they are currently cheap and they're going to provide a bigger future value for the portfolio here. If we take a quick look at the highlighted section, in the past 3 months, I've invested $8,868. And as we're speaking, maybe by the time I finish this video, you guys see that I currently have $272 waiting to be invested. So that will boost that up to close to $9,000 that I would have invested in the past 3 months, which is good. It's good. I'm still investing. I'm still buying my favorite companies. Now, if you take a quick look at my slices here, the passive income section really has been down a lot. And I can mainly say it's Tesla that's carrying that portfolio. I mean, that passive income section. Tesla has grown to be pretty big because of my dollar cost averaging that I do with Tesla, $30 a day. For me, I'm not really worried at all about Tesla as a company. And I know the stock is completely different from the company in terms of performance. Sometimes, like right now, the company is performing so well and the stock is, not performing that well. If you look at the past year, I'm sure it's still up. It's up 30% in the past year. Well, the past 3 months, it's been quite hammered. And, 1 month is still hammered. And, the past week is quite down. But the past 3 months is down 21%. That is fine by me. This gives me nice opportunity to be able to buy more shares and increase my ownership of the company. So I'm not too worried. So if you take a quick look here in the passive income section, in this side of the portfolio, I basically invested almost $11,000 in the past 3 months. I sold some stock from ARK Invest not too long ago, and then I moved that money into the monthly income section of the portfolio here. And you know, it's been good for me to do that, because this section, as it pays on a monthly basis, and you know, I want to build this up to a point where I'm able to make $100 every month from all these companies combined. So that way, at least I have that ground cushion of $100 a month. That's like $1,200 every year. Like, that's basically not guaranteed, but it's going to come in from this section of the portfolio, which is pretty nice. I like it. So if you take a look at all times, let's see how much we've made in this section all time. $85 all time. If you look at 1 year, we've made, yeah, $85 all time, because I just started this section about a year ago. But I'm putting money into this. Most of these companies in here, they are ETFs. These companies are investing in a bunch of different companies that are going to pay monthly, and I just buy their stock and they pay me on a monthly basis. So this side of the portfolio, the passive income side, it's been very nice, performing long term, and it's been holding up nicely in the short term. The only difference is that this Tesla, this part that has Tesla in it, got beaten down so much. But I'm a big fan of Tesla. I do $30 dollar cost averaging into the stock. I think this single section here will be the section that will carry my portfolio for years to come. So right now that the stock is currently down, it don't really bother me. So let's take a quick look at the heat map of the S&P 500. So this is 3 months chart of the S&P 500, the heat map. You can see Berkshire has been doing well. Healthcare has been doing well. Energy has been doing well. Obviously, all the things that's going on. Energy has been doing very, very well. Utilities has been doing well, you know. But technology, consumer, tech, semiconductor, software, every other industry apart from oil and healthcare, because of everything that is going on, everything has just been red. So generally, if you take a look at the heat map, some sectors are doing okay, some sectors are not. But in general, I think, you know, over time, this will be fine and okay. So if you take a look at the S&P 500 chart here, this is the 200-day moving average. The orange here is my 200-day moving average. And, you know, if you take a look at it, the S&P is not too far. Current price of the S&P is not too far from the 200-day moving average, which is the orange here. Okay, so the market hasn't really fallen that much. There's only some few companies that has dropped a lot. Like, so the sectors that has dropped a lot, obviously Amazon has dropped a lot in the past 3 months. JP Morgan, some healthcare diagnostic companies have dropped a lot, like DGX, LabCorp, all these companies, they've dropped a lot, which is fine. It's okay. These companies, I like them anyways. These are companies that are monopolies. Let's take a quick look at JP Morgan and the chart. So let's take a look here. Look how far the current stock price is from the 200-day moving average, from the 100-day moving average. The average price for the stock, it's usually anywhere from 155 to 160. That's where JP like to cruise. Right now is at 130, so it's a whole $30 discounted right now. So that is okay. We can look at this and see it as a buying opportunity. You know, I look at other companies like Amazon. Let's take a look at Amazon. So we take a look at Amazon here. You can see the average price that Amazon like to stay at $3,000, $3,300. That's the average price around here. 3,000, and let's say anywhere from 3,200 to 3,350. Now the current price is at 2,740. That is pretty good. You know, tech has been hammered pretty bad. Let's take a look at Apple. Apple is not doing too bad. It's still above the 200-day. Look at Netflix. Netflix has dropped a lot. You know, so these are like the big hitters of the S&P 500, and they are so far from their moving averages. So these are some things that I've been doing for the portfolio here to make sure that I stay above by looking for individual companies that I can go in and buy a little bit more of those companies at a cheaper price. So yeah, that is what I've been doing. If you take a quick look at some of the current buys that I'm currently doing, you guys can see I'm buying JP Morgan, buying adding a little bit more money into monthly income, $50 into the passive income, and then that is buying all these companies. You know, these I've been buying a lot of the pharmaceuticals because they've been beaten down a lot. You know, like the diagnostics sections, they've been down 30%. I mean, 15%, 16%, and more. You know, so I've been buying the diagnostic sector of the market. So, you know, Abbott Lab, Mark, you know, Pfizer, Quest Diagnostics, LabCorp. These are time to pick up those really good companies that they basically monopolies, and just, you know, hold on to them for the long term. You know, Waste Management, JP Morgan, you know, my monthly income stocks here. So I've been doing strategic buys of very good companies. So in wrapping things up here, what I'm gonna do is basically just still stick with my guns. I'm waiting for ARK Invest to drop to like maybe $20 or $30. I think it's going to happen. Currently, ARK is about $59. I think it's gonna drop to, you know, below $30 at some point. I just don't know when. So I'm gonna wait for ARK to fall. Once ARK drops to a reasonable price that I like, I will be going in and going back in to purchase it at that price, because I think some of the companies that she's picking, some are really good, some are not so good. But overall, her research and mine, a company, is in the right direction. So I don't mind investing a little bit of money into the company. Now, I'm taking a little bit of loss temporarily, $2,000. But I think over a long period of time, 5-10 years, I'll be able to make this money back with profit and then some. So the final portfolio section that I want to talk about is the Warren Buffett section here. Surprisingly, this section of the portfolio has done so well with everything that has happened. It has done so well, and I don't pick this. This portfolio get picked by Warren Buffett. Warren Buffett is the one that picks the stock that he wants to invest in. Basically, as a company, Warren have to file 13F filing. So that's public filing. Those companies that Warren Buffett is investing in, they will be public. So what M1 did would be to go in and make a pie of Warren Buffett's portfolio companies. What I did was to add that to my stock portfolio. And let's just run through this really quickly, and we're gonna end it here. I don't want the video to be too long, but just take a look. As compared to everything else on the market, it has done very well. In just 1 week, it's just down 3%. 1 month is down 8%, and the past 3 months is down 5%. Meanwhile, my other section of the portfolio is down like 20% or something, or 15% or something like that. Look at the past year, it's up 18%, so this section of the portfolio hasn't done badly at all. So Warren Buffett is holding this portfolio pretty nicely. The companies that he has selected, they have been doing very, very well. So here is just my overall portfolio as compared to that 3 months. In 3 months, Warren is down 5%. I'm down 16%. And obviously my portfolio is more risky. I have very, very high risky companies that are still in their infancy, like Tesla. A lot of the tech companies, they're always reinventing themselves. I have crypto. Obviously Warren Buffett don't have crypto. Taking the risk on ARK Invest. So high risk, high reward, but at the same time, the basic things that I still trying to make sure I focus on dividend for the most part. A good chunk of the portfolio, a good chunk of the money that I've put into this portfolio has been focused and geared on dividend companies that pay me to own a piece of it. This is the things that I stay focused on. And I just make sure I keep on staying focused on investing in companies that pay me to own them. So yeah, that is it for today's update. The main takeaway for today's video is that I'm still staying focused on buying quality companies, buying dividend producing companies, and doing more analysis. Check out some of the videos that I did on deep dives. I'll leave some of them in the cards for you to check out. I do deep dive into some of the companies that I'm strategically buying just because they've been beaten down so much. So I stay focused on buying quality companies and dividend producing companies that are producing money, cash money for the investors. In the past year, I've earned $764. This is cash money that comes into my account from the companies that I own, earned dividend. So it's been pretty good. Even though we've had ups and downs, I'm still investing in companies that pay me to be an owner in them. And for as long as I keep doing that, I think over time the portfolio will be just fine. So yeah, thank you for watching today's video. If you like this kind of content, please subscribe to the channel, and I'll see you next time. Take care. Love you all. Bye.